Hi, I'm James Smith, Chief Executive Officer and Managing Director at DRA Global. Today we released our financial results for the first half of the 2023 financial year. I'm pleased and indeed very proud to report that the DRA team has delivered a solid set of outcomes for the period. Our positive first half financial results are a result of further stability in operating performance across all of our business units. This has driven sustained momentum in group profitability, with our continued efforts enabling a substantial improvement in liquidity and our net cash position. We are committed to the health and well-being of our employees through creating and cultivating a strong culture of continuous safety improvement. A total of 8.8 million person hours were performed through the period, spanning 17 active project sites and 32 maintenance and operations sites. The group's safety performance for the period was subsequently overshadowed by a fatality of an employee of one of our contract partners at the Moyith project in Saudi Arabia that occurred on the 15th of July 2023, where Senate is currently overseeing the construction of the copper zinc concentrator. We are deeply saddened by this loss of life and remain committed to and focused on active leadership participation and ongoing implementation of awareness programs, setting clear expectations and behaviours to help reduce risk to our people and the communities we work in. Turning attention to our financial results. A profitable first half was delivered in a return to operational and financial stability at DRA. The group generated $424 million of revenue for an underlying EBIT outcome of $23.5 million, a significant improvement on the $16.4 million loss in the prior corresponding period. First half underlying NPAT was $16.1 million compared to the underlying NPAT loss of $13.7 million for the previous period, while statutory EBIT was $26.8 million and statutory NPAT was $19.4 million. This translates to an adjusted earnings per share of approximately 26 cents for the period, compared to 72 cents loss for H1 FY22. The group's cash position increased by $8.4 million through the half, with overall net cash improving by $29.4 million to $88.5 million. Gearing reduced to 14.2% from 21.2%, well within target levels. We were able to achieve this through repayment of the global banking facility during the period to further strengthen the company's balance sheet. I'll now pass to Chief Financial Officer Michael Sucher, who will further elaborate on financial outcomes for the half.
Thanks, James. I'm delighted to be speaking to a really solid set of financial results for the first half of this financial year, which are a direct outcome of the continued collective efforts of our fantastic leaders and teams across DRA. These outcomes represent a continuation of and stability in the underlying performance of the group that we started to deliver in the second half of last financial year. The group delivered a statutory EBIT outcome of $26.8 million, which when adjusted for the fair value gain on unlisted rights, translates to $23.5 million of underlying EBIT for the period. Looking at the numbers in closer detail, we see solid earnings across all of our major businesses, which were delivered in line with expectations. Continued growth in EMEA, Minipex and Americas earnings are complemented by APAC's return to profitability post the divestment of the GNS engineering business last year. We continue to be focused on the quality of our earnings and are committed to high calibre clients and work in combination with responsible pricing. Importantly, our revenue is well diversified across regions, commodities and clients. We've seen the global demand for critical minerals driving investment in nickel, lithium and other energy transition minerals projects, which has flowed through to revenue in our growing Americas and APAC business units. Across the group, the DRA team has converted and continues to convert many opportunities into contract wins, with $426 million in new contracts and extensions secured during the half year. Solid cash inflows from operating activities enabled us to strengthen our balance sheet with full repayment of the $17 million general banking facility that was owing at the end of last financial year. Notwithstanding this significant reduction in debt, our cash position grew by $8.4 million. We ended the half with approximately $151 million in cash and $62 million of debt for an improved net cash position of $89 million. Our cash balance is comprised of the base level working capital required to sustain our businesses, cash held for bonding or restricted by statutory or exchange controls, cash held in non-wholly owned subsidiaries and customer advances, and cash committed for various tax, debt and capital obligations, leaving us a modest but building cash surplus at the end of the half. As foreshadowed in our FY22 results presentation, the aforementioned repayment of our short-term debt facilities translated to a reduction in gearing to 14%, which is in line with our target of less than 20%. We continue to prioritise financial and operational discipline going forward to ensure ongoing balance sheet strength. We are committed to sustainably growing our people and our business while targeting attractive capital returns for our shareholders. Our priorities for the remainder of FY23 include continued strengthening of our balance sheet, retention of and investment in our people, reduction of our financial gearing, sustaining our base working capital requirements, and incremental capital improvement on near-term growth opportunities. DRA is also targeting future sustainable and efficient returns to shareholders through annual dividends. Thanks, and back to you, James.
Thanks, Michael. As mentioned, we have seen strong diversified earnings across all of our major businesses during the first half. EMEA Projects continue to deliver significant projects across the PGM, base metals and bulk commodity sectors and has progressed its hydrometallurgy and energy solutions capabilities, as well as adding to its battery minerals and underground mining pipeline. Senate continues to build a portfolio of projects in energy transition, base metals and gold, given their strong track record in these niche capabilities. From a solid base in Africa, they are now assisting projects in Europe, Australia and North America. Winnipeg's renewed the significant Kroondal and Adawai contracts, which is a real testament to the high quality services the team have provided over a sustained period. With the disposal of the GNS business in September 2022, APAC has returned to its core capabilities and is starting to see stability in earnings. We believe it is well placed for future growth with its increasing presence in the critical minerals industry, deploying experience and expertise in areas such as lithium and rare earths. The Americas is actively growing its advisory offerings and further increasing its battery minerals expertise through multiple due diligence, operational readiness and optimization engagements in lithium and copper projects. At a group level, the outlook for financial performance in the second half remains positive and broadly similar to H1 FY23. We have a strong total pipeline that includes an estimated $4 billion of opportunities, with $2.8 billion related to projects and $1.2 billion related to operations. Moving forward, we will continue to focus on our core strengths of high quality engineering, project delivery and operations management, while looking to maintain diversified revenue streams across geographies, service offerings, clients and commodities. In closing, and on behalf of the global leadership team, I must thank and acknowledge the 4,200 people at DRA. This solid start to the 2023 financial year is due to your collective efforts in delivering great work for our clients around the world. We now focus on maintaining this momentum through the second half as we continue to work together to turn the future of mining into reality. Thank you.